In the vast tapestry of Indian industry, few names resonate with the same blend of trust, resilience, and consistent performance as the Tata Group. But several companies from the Tata stable have weathered storms from time to time and continue to do so. Consider the early 2000s. This was a period marked by the dot-com bust and the global economic slowdown. While many companies faltered, a nascent giant within the Tata stable, Tata Consultancy Services, was quietly laying the groundwork for its ascent. Even as IT spending faced headwinds, TCS's focus on deep client relationships and global delivery models paid off. A relentless pursuit of quality projects allowed it to grow steadily. Investors who held on through that period and indeed through the 2008 global financial crisis were rewarded handsomely. TCS became a consistent compounder, its stock price reflecting the growing market dominance and robust dividend payouts. In 2025, many are dismissing AI as the proverbial storm in the teacup. However, the management of TCS is certainly being more deliberate in managing the AI led disruption. Whether the company manages to weather the AI storm remains to be seen, but its balance sheet is certainly well geared to withstand uncertainties for several quarters. Similarly, in the mid 2010s, the Indian automotive sector faced intense competition from regulatory shifts. Tata Motors was grappling with challenges in its domestic passenger vehicle segment. Its strategic acquisition of Jaguar Land Rover was met with skepticism. But despite global market volatility, JLR's luxury segment provided a crucial revenue stream and technological expertise. While the journey was bumpy, Tata Motors demonstrated its ability to make bold long term bets and navigate complex global landscapes. Investors who believed in the turnaround story and the inherent value of its diverse portfolio saw significant wealth creation over the past decade. Tata Motors' latest acquisition of Italian truck maker Iveco for $4.5 billion again raises questions about the near term hiccups. But given the company's long term track record, such acquisition could possibly add value over the years. Very few companies in the world can produce the kind of advanced high grade steel that Tata Steel can. Even so, Tata Steel is being hit by the same forces that are pummeling every steelmaker. Steel manufacturers are currently producing more steel than the world can possibly use. The rest is putting pressure on pricing. Excess steel production is estimated to reach 721 million tons by 2027, according to the OECD. One answer to the problem of excess would be to simply make less steel. The problem is that no country wants to be the one to stop producing a material that is considered essential to its economic and national security. Over the past decade, a flood of cheap steel from China has transformed the global market. China's mammoth steel mills, built with government subsidies, lack the environmental controls mandated in Europe. Yet, they make more steel as well as aluminium than the rest of the world combined. As China's economy has slowed, more of these metals have been exported at cutthroat prices. While Tata Steel benefits from captive mines in India, global price movements still play a significant role, especially for its international operations. Nevertheless, investing in low emission steel making, exploring hydrogen based steel production, and aiming for net zero emissions are expected to keep the steelmaker relevant. For Titan, the watches and the wearable segment grew by over 20% in FY25 with better product mix and volume. Fragrances and fashion accessories, the smaller categories, jumped more than 50% each last year. Even Titan Eye Care, despite net store closures, delivered over 10% growth. However, it is Titan's core gold jewelry flagship Tanishq which is facing stiff competition. The brand remains the top of the mind brand for jewelry buyers. Its recall and trust scores are unmatched. Further, the smaller brands like Zoya, Mia and Carrot Lane are scaling fast across 140 cities despite some margin pressure. Yet again, what really gives the Tata story depth is its ability to think long term. Titan's recent acquisition of Damas, the century old Middle Eastern jeweler with over 150 stores across the GCC. The brand's operational scale and direct access to NRI heavy market with high per capita income allows Titan considerable growth trajectory. Integration could probably take a few quarters. But once it starts contributing, Titan's jewelry portfolio could appear more diversified and less India dependent. Next, take Tata Elxsi, a design and technology services company. The high growth areas are automotive, media and healthcare R&D. Tata Elxsi has consistently delivered strong financial performance even through periods of economic uncertainty. The company's design expertise and ability to innovate have allowed it to gain market share in niche segments. With the technology landscape facing some disruptions, the growth in the revenue may falter for Tata Elxsi too in the near term. However, the company is well geared to endure such obstacles. Entities like Banaras Hotels and Taj GVK Hotels, though less significant in the Tata Group, have demonstrated a remarkable capability to generate value even during challenging times. Their success story is deeply intertwined with the overarching strategy and brand power of the pair Indian hotels. The hospitality companies under Tata will continue to leverage the Taj brand. At the heart of Benares Hotels and Taj GVK's value proposition is their association with the iconic Taj brand managed by IHCL. The decade ahead may be transformative for several other entities of the Tata Group. Tata Consumer could become a powerhouse with the group's investment in Tata Digital or the Tata New Super App. Tata Power is already making significant strides in renewable energy with increasing investments in solar and wind. The group's new battery manufacturing arm, Agratas, is establishing gigafactories in India and the US, signaling a major play in the electric vehicle and energy storage ecosystem. A bold new frontier for Tata is the entry into semiconductor manufacturing through Tata Electronics, which is yet to get listed. With significant investments in chip fabrication and assembly units, this move also is to build a resilient domestic supply chain for critical technologies, addressing a strategic national need. Few other entities from the group like Voltas, Trent, Tata Communications, Tata Technologies, Tata Chemicals, Nelco and Tata Investment Corp may not lead the value creation from the front. Also, investors need to be watchful about the valuations of these stocks before buying into the growth narratives. However, with such a wide spectrum of growth opportunities over the long term, speculating over the near term uncertainties for the group could be a mistake. Hope you like this video. Thanks for watching.